A very good morning to you. Welcome to Business Morning. I am BC Adebayo. We'll begin today's program with a forecast from the International Monetary Fund that the global economy is expected to shrink by 3.0% in 2020 in a stunning coronavirus-driven collapse of activity that will mark the steepest downturn since the Great Depression of the 1930s. The International Monetary Fund, in its global economic outlook, also expects global debt to increase significantly over the next year. The chief economist of the IMF, Jita Gopinath, says moratoriums on debt payments and debt restructuring may need to be continued as the world economy emerges from the coronavirus pandemic lockdown. According to her, downside risks prevail in the global economic outlook. Debt-to-output levels will stabilize as economies recover. The IMF is also projecting Nigeria's economy to contract by 3.4% in 2020, but rebound with a 2.4% growth in 2021. And back home, the Lagos Chamber of Commerce and Industry is asking the federal government to begin to set agendas for the Nigerian economy after the pandemic. The LCCI, in a statement, proposes a business and economic sustainability in a move to save the economy from collapse, adding that there is a need to salvage investments across all levels. The Chamber is also calling for the temporary suspension of the recently introduced 50% increase in VAT till the end of the year and a 50% reduction in all taxes currently being paid by manufacturing companies for 1 year. Our Pan-African credit rating agency, Augusto & Co., recently predicted that a 20% drop in diaspora remittances to Nigeria from $25 billion last year to $20 billion this year. Now, that projection is attributed to the COVID-19 fallout, which has caused severe disruptions in global economy. Well, joining us now to drill down on the report is the head of consulting at Augusto & Co., Jimmy Ogbobine, who will join us in just a moment. Well, let's talk about oil prices now. Of course, the International Energy Agency expects the coronavirus crisis to erase almost a decade of oil demand growth in 2020, with countries around the world effectively having to shut down in response to the pandemic. A public health crisis has prompted governments to impose draconian measures on the lives of billions of people. It has created an unprecedented demand shock in energy markets, with mobility brought close to a standstill. The IEA says activity in the transportation sector has fallen dramatically almost everywhere, noting that confinement measures had been implemented in 187 countries and territories in response to the COVID-19 outbreak. In its closely watched monthly report now, the Paris-based agency said demand in April is estimated to be 29 million barrels per day lower than a year ago, and that's hitting a level last seen in 1995. For the second quarter of the year, oil demand is expected to be 23.1 million barrels per day, and that is below a year ago levels yet. While a recovery is forecast to be underway in the second half of the year, the IEA says it expects this to be gradual, and in December, demand will still be down 2.7 million barrels per day year on year. Well, benchmark Brent crude traded at around $29.13 a barrel this morning, and that's down more than 1.5%. And U.S. crude futures stood at $20.11, down around 0.1%. So let's talk now to the head of consulting at Augusto & Co., Jimmy Ogbobine, to get his reactions on the report. And of course, good morning. Thanks for joining us on the program.
Thank you. Good morning.
Well, let's begin our conversation by taking your reactions to the IMF forecast, of course, the global economic forecast that the global economy would shrink by 3.0% in 2020 and 3.4% for Nigeria in 2020. What's your reaction to the forecast?
I think that forecast, especially for Nigeria, sort of sounds like good news today. We're all aware what's going on in the world, and most times when we hear the economic analysis about what's currently going on, we tend to forget that there's an underlying health issue which has actually led to all of this economic morass we're seeing. So Nigeria's two largest cities, Lagos and Abuja, are practically have come to a halt. And then by the time you add the fact that quite a number of other states, for instance, some of the large states across the country, like Rivers State, Kano, which is the largest economy in northern Nigeria outside of Abuja, ex-Abuja, have also enacted some form of lockdowns for the other. In Delta State, the second to third largest oil contributor to the country. So I think a 3% contraction is actually quite mild when we begin to look at the kinds of things we're seeing, the underlying health issues and the underlying operational issues in the economy, where we've practically lost an entire month, the entire month of April. Even in the war, we didn't experience all of that. So the 3% forecast for IMF is actually quite, sounds like some form of positive news, because at Augusto Consulting, we're actually looking at much wider numbers than that, close to double digits, upwards of about 7% at the moment. So it's a forecast we may revise as things change as well.
Your organization had a webinar last week where several comments were made on the state of the economy in light of the coronavirus pandemic. But let's focus on the projections now that diaspora remittances will decline in 2020. What did you base this projection on?
Okay, so diaspora remittances have been Nigeria's second strongest, largest contributor of foreign exchange to this country for over a decade, second only to crude oil. And our numbers have held steady at between 23 to 25 billion over the last 5 years. So this is our first projection in close to a decade of revising downwards. And so why are we revising our projection downwards? Like I said, in most of the analysis, let's not always forget the underlying health issues. And what are the underlying health issues? So we talked earlier, your first question, we addressed how Nigeria's largest subnational economies have been shut down. But let's also remember that across the world, we're seeing the same. So the UK, which is the largest contributor of diaspora remittances to Nigeria, is on a complete lockdown. Same as well as some of the largest economies in the United States, California, Florida, New York, are also on lockdowns. And so you need to begin to imagine that what's happening across the world, Nigeria is not alien to it. Now, what are diaspora remittances? Basically, they are foreign remittances by Nigerians abroad. And Nigerians abroad right now are also constrained by what is going on. So in the UK, in the US, you have lots of Nigerians who have been affected. Our survey also indicates that the largest remittances, the people who remit the most to Nigeria, are white-collar and blue-collar workers. For now, we do not envisage that they will be the most affected in all of these, but we think that they will also be affected. And you need to understand that there's a dip in consumer confidence. There's a dip in consumption. People are saying to themselves that, let me conserve what I have. So as a result, we think that there will be a 20% drop from about 25 billion to 20 billion. But at the same time, it may not go much lower, because if you now begin to look at the patterns around remittances, you would see that most Nigerians, over 75% of Nigerians who remit money, do so once a month. And why do they remit funds? They remit funds to take care of the basic needs of their dependents in Nigeria, family, mainly old family members, to support consumption, basically. So we think that, yes, while there may be a $5 billion drop, it may not be worse than that.
We'll get back to Jimmy in just a moment. Of course, Jimmy Ogbobine is still with us. Continue, Jimmy. We're listening to you.
Thank you very much. So, like I said, if you look at remittance patterns, most respondents to our survey, because we carried out a global survey on Nigerians in diaspora. So most remittances are done once a month, and they are mainly done to support the needs of family members in Nigeria, especially family members. So if we also pick the fact that most of the remittances are also done by white-collar and blue workers abroad, people who earn over $50,000 annually, then what this tells you is that there will still be some level of support. Where we think we will find a major drop in terms of remittances will be remittances towards investments and remittances towards ad hoc events. For instance, the survey found out that about 10% of remittances goes to support social activities in Nigeria. Social activities like parties, social activities like naming ceremonies, marriages. And you quite agree that most of all of that is not going on at the moment. So just that basic need, because that basic need has been cut off, then we may see a slowdown for remittances to that space as well.
Now, you've given us a breakdown of your data at Augusto & Co., but the CBN's report on diaspora remittances seems to be different from yours. Can you explain the disparity?
So are you talking about the CBN's numbers around remittances inflow? Is that correct? Is that
Absolutely.
what you mean? Okay. If you follow frequent commentaries around that issue, you find out that there were different pointers looking at the CBN's data to actually show that Nigeria has about $25 billion. So initially there was some form of commentary from the CBN, but other economic reports from the central bank indicates that we're doing over $20 billion annually. So we think that that should actually settle the dispute, because if you look at the CBN's economic data, then it actually settles the dispute.
Your report also referenced some pressures on the Naira. Tell us the magnitude of pressure that you see on the local currency.
Okay, now it's inevitable that there will be pressures on the local currency, because one of the things that, so going back, I always have to do this, going back to the underlying issue. The underlying issue is coronavirus. The world economy didn't just basically come to a halt because it wanted to. It's coronavirus. And how has coronavirus affected Nigeria's major export commodity, crude oil? We just talked about several large economies in the world being on a complete lockdown right now. So what this means is that consumption for energy has dropped. And if the underlying consumption demand for energy has dropped, India is 1.3 billion. It's the second largest country in the world by population with 1.3 billion. So imagine India, which is one of our largest buyers of crude oil, an entire country of 1.3 billion people coming to a halt. So what's demand for crude oil like then? So energy consumption is low. So with energy consumption low, crude oil demand has dropped. With crude oil demand dropping, what that means is that foreign inflows into Nigeria as a result of crude oil will drop. So I'm not sure we should actually consider the pressures on the Naira outside of these factors. We need to understand what the underlying issues are, that there's a global contraction caused by a health issue, which has led to the drop in demand for crude oil across the world. Even here domestically, several cars are parked, diesel generators are switched off. So there's a global crunch in demand for crude. As a result of that, the inflows of FX into Nigeria from the sale of crude will drop, without a doubt. So the pressures on the Naira are expected, and I think will persist for as long as we continue to see, for as long as we have the lockdowns, which has led to a contraction in demand for crude.
Head of Consulting at Augusto & Co., Jimmy Ogwebinu, thanks for sharing your thoughts with us this morning.
Thank you very much.
Well, it's time to do a review of Tuesday's trading activities at the markets, and Temple Ashaju joins us to give us those numbers. Good morning, Temple. So the stock market resumed from the Easter break on a strong note. Tell us what happened.
Well, quite a number of things happened. If you notice, BC, we know that Dangote Cement was one of the major gainers yesterday, and of course MTN was also one of the major drivers for the market yesterday. These two key companies, as well as several other tier 1 names and tier 2 names, in fact, in the banking segment of the market, also did so well to contribute to this level of gains that was more than 200 billion naira in the markets yesterday. So we know that Dangote Cement yesterday completed its book building for the 100 billion naira Dangote Cement bond issue, and of course a lot of subscribers went into that space in the capital markets. It is expected to beef up the non-sovereign bonds for the market generally to over 1 trillion naira eventually in the market. Now we know that today being the 15th of May, in the next 2 days will be the qualification date for the dividends of MTN Nigeria PLC, and of course we know that this reason is one of the reasons why some investors investors are beginning to now bet on that particular stock because this is a company that is paying out 4 naira plus in the market. So if you look at what we had yesterday, all share index was up 2.32%. Market equity capitalization for the market also settled higher, given the 250 billion naira gain that we saw yesterday in the market, pushing it up to 11.402 trillion naira. Look at the volume and value of transaction. We saw an increase of 77% in the volume of transaction yesterday. The previous transaction was 200 and something million units of shares as of Thursday when the market last traded. But when the market resumed yesterday, we saw a volume at 557.81 million. And of course, the value of transaction dipped to 2.61 billion naira compared to around 505 point something billion that we did on Thursday before the market, went for the break. The deals, of course, was 5,310, and of course, if we compare to what we did the previous session, that was higher. Banking segment of the market experienced a lot of gains. We saw a 4.53% gain for this sector yesterday, thanks to UBA, which did 9.7%, Stanbic IBTC, Sterling Bank, and of course, Jais Bank. These are key contributors to this segment of the market yesterday, were pushed up the indices to 453 basis points in terms of performance. Consumer goods segment of the market, we know that Dangote Sugar, given the mergers and acquisition between them and Savannah Sugar, that has continued to experience some kind of attraction in the market, so contributed more to the level of gains that we saw here yesterday, 2.17% gains on that side of the market. We don't know why Boa Cement in the industrial goods segment of the market has been dipping lately. I think that actually calls for some level of investigation and, of course, analysis and research for us to understand. But it was down yesterday and contributed more to the losses that we had in this space yesterday. WAPCO was also down yesterday. Of course, for the case of WAPCO, we know that that will be a bit of profit taking because they are paying out 1 naira and dividend to investors. And, of course, investors had reacted, over time to that level of dividend that is being paid out. So for some investors who think that the 1 naira dividend may not be enough for them, what they'll do is to just sell down if they've seen some sort of appreciation in the share price. That will be a plus for them. Let's look at the insurance space. Space was down some 26 basis points yesterday, no thanks to Lasaco, which was negative. And of course, that pushed down the indices. There too, you can sense a bit of profit taking on that space because, again, this is a sector that has been recording so much of gains lately. So if you do your valuations and you realize that it is enough for you to make some gains, then you can actually edge out of the system. In the space of oil and gas, 1.34% up yesterday, thanks to some companies that was positive. We got Oando and, of course, Cornwell quite positive yesterday in the market. If we look at the energy stocks now, which all falls under the oil and gas segment of the markets that we track, Oando, as I said earlier, was positive, ended at 2 naira 64 kobo. This is a company that I noticed has actually added 20 kobo, 20 kobo, 20 kobo 3 times now. That gives it this 2 naira 64 kobo. And of course, yesterday alone was 10%. But if you look at Adover PLC, it's continued to fall. It's been more of a free fall down to this level. But Cornwell yesterday, perhaps some dividends payouts is in the works for investors in that space. BC.
Thanks, Temple. We'll see what direction the markets will take today. When we return in just a moment, we'll be looking at setting the COVID-19 economic policy agenda for MDAs. Please stay with us.